All right, future HFAs. So the last module that we're going to cover in this course is Module 7, Budgets and Cost Reports. And I put them together because a couple reasons. Um, they're probably our biggest, broadest concepts, and because of that, with both of them, I want to hit on some high level stuff, some stuff I think you would be exposed to when you're running your nursing home. But I don't. I think it's outside the scope of this course to really be able to. We could have a whole course on budgets and a whole course in cost reports. So I thought it was best to put them together, go over some high level stuff, some real world concepts related to both, and then we have a really good real world assignment at the end. So let's dive into it. All right, so with a lot of concepts that we cover, the first thing I like to go over are the maybe the unique characteristics of the concept or the whys behind it. And I think with budgets, it's really important to go over the why. Like, why do we care about a budget? Why do we create a budget? Because whether you are now or someday, you're going to be running a nursing home, and maybe you'll be a part of the budget process. Maybe you'll have the budget handed to you. But I think the why behind it is what can be so impactful to your operations. The budget is our plan, and it should be ideally a strategic plan to help you uh, get to the goals of that nursing home. And although the budget oftentimes it really comes from a place of financial, from fiscal responsibility, because of what we do in long-term care, taking care of patients, that budget is going to have hours that you're budgeted for CNAs, for nurses. It's going to have budgets related to raw food. All of that directly impacts your quality of care. So the budget, it allows for, it should allow for the appropriate allocation of your nursing home's resources and how you manage those, which again directly correlate to your patient outcomes. Now, a really important characteristic of budgeting is risk management. And you really have to uh, take the time and work on trying to forecast changes in our environment. Shifts in our population can significantly impact your operations. If there's growth of a specific managed care plan within your geographic region, you got to try to forecast that and budget that. The network status of your nursing home, which can change, or maybe the network status of a competing nursing home may change, and that can drastically impact your budget, your ability to meet the financial obligations, and therefore the resources that you have available to take care of your patients. There's a lot of market changes in our industry. And if a new competitor enters a marketplace, that needs to be taken into consideration when developing your budget, because it would be like any other industry. If there's a new competitor that comes into the market, it could very much impact your day-to-day operations. Another a factor to take into consideration when doing a budget, why we want to budget, is changes in our regulatory environment. Um, an example of that is the COVID-19 pandemic. As you can imagine, going into 2020, no operator budgeted anything related to a COVID-19 expense, right? Most people went through 2019. They drafted their 2020 budgets. They used the past 5 years of data. They looked at 2019 and they created their budgets. And then March 2020 came about. Uh, the In the news, a lot of nursing homes really struggled to take care of their populations because of COVID, and it really threw a curveball in everyone's budgets. I know some of the clients that I have, basically their budgets were rendered moot because they were budgeting off of prior year, off of the prior 5 years, And then when COVID came, new regulations were introduced, therefore, new requirements related to personnel, related to uh, supplies. You may not make the connection at first, but when a new regulation comes down the pipe from the feds and the state and into the actual facility, it has such a huge impact on what we do, and therefore needs to be taken into consideration when we do our budgets. A real world example, I was actually running a nursing home in March of 2020, and I was actually director of operations. And then when COVID hit, it hit one of our nursing homes, and I had to go in and run that specific building. And we had a red unit, a COVID unit, and really the the budgets that we were utilizing, just they didn't take COVID into consideration. So we were over budget on so many of our expenses because we didn't take. I mean, you look at a nursing home that may have to isolate a patient because of flu or some type of other infectious disease. It can happen. Pre-COVID, the isolation supplies were an afterthought, and then during the heat of COVID, everything from toilet paper to gloves to the masks to the appropriate type of masks. All every time the regulation changed, it would impact basically our variance to budget. So the compliance and the regulation and that regulation oversight and those changes with state intervention significantly impact how we budget, why we budget, and how we work with that budget on a day-to-day operations. And then most importantly, just like every other concept we've covered in this course, it's all about quality of care. It's about the outcomes. And when when we talk about budgets, I don't want it to be just, an accounting, bean counting. Oh yeah, that's the financial side, what have you. When you take on the operations of a nursing home and you have to abide by a specific budget, that directly impacts your nursing home's ability to provide quality care. If you take over a SNF and you're given a budget and that budget isn't meeting the needs of your patients, that's going to make it very hard on you to be able to achieve your operational goals. So hopefully, whether you're running a nursing home now or about to go into an AIT, hopefully you work for a company where you get to be an active participant in the budget decision making. So let's it's a really good topic, really big topic. Let's dive into some aspects of the budget. All right, guys. So instead of like uploading the 90 pages of a budget, I thought it would be better just to go over the different components of a budget, talk about each one, and then give some examples of each. So from a 30,000 feet above looking down perspective of a budget, your budget's going to have the planned revenue and the planned expenses, and therefore the planned profit of your nursing home. And within the revenue component, you're going to have your census and your rates. You'll have some ancillary things like that. And the expense component, you have operating expenses, your labor and non-labor, your fixed expenses like a lease payment, a mortgage payment, and then you're going to have capital requirements. A lot of times, if your property is financed by HUD or if there is a REIT behind the scenes, they're going to have some capital requirements, just like a franchise for McDonald's. There's a reason why the physical plant of a franchise routinely updates. If you have an investor behind the scenes, they're going to have some capital requirements for you as well. So we'll dive into each component and talk about them. All right, so before we get into the expense component of a budget, let's look at the revenue component. So it's interesting because the revenue component, um, as simple as it appears, it can become very complex once you dive into it. So, within the revenue component, most nursing home budgets are going to have two variables that make up the revenue for your nursing home. You're going to have, of course, your census, your patient days. Then you're going to have the rates correlating to that payer type. So if if you look at census, you're going to budget how many private pay days do you anticipate having during that period, like that next year? How many days do you anticipate having private insurance? Do you anticipate having Medicaid? Do you anticipate having traditional Medicare or managed care? If you're in a geographic area that has a lot of Humana or Cigna or UHC, you may have to budget a specific amount of days that you're anticipating having with that managed care program. And you're going to pull that with everything within this budget. You're going to look at historic trends, you're going to look at your market, and maybe last year you averaged 15% traditional Medicare. Well, going into that next budget season, you may feel that is spot on. We're going to budget again. If we're a 100-bed nursing home, we're going to budget 15% being traditional Medicare, meaning if it's a 100-bed facility and we're full, say we have 100 patients, that on any given day, on the average day, 15 patients of that 100 will be traditional Medicare. Now, of course, it doesn't mean that you expect every single day to be at 15. You're expecting the average to be at 15. And that's really the case with most things that we budget in a nursing home. Same thing with a private pay patient, a Medicaid patient, traditional Medicare, or a managed care program. You're really not going. You're not going to budget because you think that every day you're going to have that specific amount that you think. It's going to be on average, your average daily census. So directly correlating to your census would be the rates. Now, this is where, like, honestly, on the surface, it is pretty simple, right? But then when you dive into it, it can be more complex. So for the purpose of this course, let's keep it simple. If you're looking at the revenue side of your budget, and let's take traditional Medicare as an example. If you are budgeting that you're going to have an average daily census of 15 Medicare on average, so then what you will budget to correlate to that Medicare population, that Medicare census, you're going to budget a rate, right? And those rates would be what you're going to get paid per day, that per day per diem, for a patient who is under the Medicare umbrella. So let's take a look at this, okay? So if we are looking at traditional Medicare within your budget, okay? So then what you're going to do is you're going to look at historic trends to see, okay, well, how many patients do we think that we are going to serve under the Medicare umbrella, the traditional Medicare umbrella, okay? So whatever we think that is, you will then correlate based upon historic trends, the rate, right? And these correlate together. And you would do that for every single payer type. However many private pay patients you think you're going to serve during that period, you would correlate that to private pay rate. Same thing with Medicaid or Medicare or managed care. And that's how you build the revenue side of your budget. So again, it's a simple concept, but then when you dive into the weeds of it, obviously we're not going to have 15 Medicare every day, and obviously we're not going to have a 560-day rate for every single Medicare patient, right? Those are based upon averages. So you take your patient days times your budgeted rate, and that's what gives you the budgeted revenue for your facility. All right, so after the revenue side, then we dive down into the expense side, right? Because ultimately the equation is pretty simple. Revenue minus expense gets you your profit. On the expense side, it's similar to the revenue side, whereas it's a simple concept, but then once you dive into the weeds, it can be very tricky. But for the most part, your operating expense side is going to be divided into two budget categories. You're basically going to have your labor and labor related expense, Then you'll have your non-labor related operating expense. So let's dive into that a little bit deeper. The labor expense is pretty self-explanatory. You're going to have wages, salaries, you have staff that you have to pay. Healthcare is inherently a very high labor cost industry. We haven't quite figured out how to get robots to take care of our patients, right? So, and that will probably never happen. And that's why labor is such a significant part of what we do, what we manage, and what we budget. Within the labor component, you budget the wage, and then you budget the hours. Okay, and it's similar to how on the revenue side that we talked about, you'll budget the census days, like how many traditional Medicare days do you anticipate running for that period, and then you budget the average Medicare reimbursement rate, and you take those together, and that gives you your revenue for Medicare. The Within the labor component related to wages and salaries, it's very similar. You may budget on average, say, $32 an hour for your registered nurses. But that's one aspect of the labor component. You also have to budget how many hours those RNs are going to work based upon the size of your building, based upon the need. So the labor component is really made up of wages and hours, and that's how you get your wages and your salaries. The labor related component is just as the name uh, states. It is the expense associated with everything related to your labor, like benefits, like your PTO, your sick pay, payroll taxes, things like that. It's not labor expense, but it's an expense that is directly related to your labor. Then that brings us to the non-labor related operating expenses. That is pretty much everything that you can think of within that nursing facility. Now, we already covered operating expenses in a different module. So my point of this module is to just go over, you actually will budget every single aspect. And how do you do that? Well, you do it off of trends. You do it off of prior year. You do it off of maybe the prior 5 years. If you're with a larger company, they may do it based upon region. And it's a very, very labor intensive, very time consuming, but hopefully you end up with a company where you can be an active part in the budget decision making. All right, gang. So when budgeting the fixed expenses or your non-operating expenses is actually probably the easiest concept to grasp because, like the name says, it's a fixed expense. If you have a 100-bed nursing home, whether you have 100 patients or 10, those fixed expenses don't fluctuate like your operating expenses, right? And the fixed expense is very similar to some fixed expenses you may have in your life, whether it be a mortgage or a car payment. Every month, when you are in a nursing home, a portion of your resources that you have to take care of those patients will have to go to a fixed expense. That may be a lease payment, that may be a mortgage. You may have HUD. Your building, your property may be financed by HUD, and every month the payment goes to HUD, just like your mortgage goes to your bank. You may have an individual investor, and you may have management fees too, where every single month a certain percent of your revenue is going to go to a person or a company. But for the purpose of this module, the fixed expense components of a budget don't fluctuate month by month. And to be honest, in a lot of cases, the fixed expense component of a budget, you may not be privileged to that as the administrator. It may be something that's at a more corporate level. All right, guys. So I would say the most important financial tool you're going to have when you run a nursing home is going to be your budget. The second is going to be your cost report. Now, based upon what company you're with, you may or may not have any exposure to your cost report. Unlike the budget, where I'm very confident, whichever company you work for, the budget will be something that you work with almost daily, whether it be budgeted labor hours, labor dollars, budgeted overtime, budgeted raw food expense, budgeted whatever it may be. Cost reports, it may be something that your company uh, outsources, and you may not have a lot of exposure to it. So I want to give you some within this module, but it does significantly impact your operations. Okay. So, as always, first off, cost reports. What is it? Why should we care about it? So, a cost report, almost all providers have to submit cost reports. And basically, it's because specifically within long-term care, we are predominantly government funded, right? It's Medicare and Medicaid is the vast majority of how a nursing home gets paid. Very, very little is private pay in nursing homes. Remember, we're not talking assisted living or freestanding Alzheimer's units. We're talking nursing homes. Government funding is a big part. It's pretty much our industry. The cost report is a way for the payers, such as whether it be the federal government or state government, to analyze the cost of that nursing home, which that kind of rings a bell, right? Cost report. That nursing home has to report its cost to the government. It provides financial transparency and cost accountability, which is a very good thing because if you look at it, nursing homes, which we already discussed, predominantly Medicare and Medicaid funding, where does that funding come from? It's our tax dollars. So our tax dollars are funding these programs like Medicaid, Medicare, and then money is being distributed to nursing homes to then take that reimbursement and hopefully allocate responsibly all of its resources in a way to provide quality of care. Without cost reports, there's really no way for anyone to dive into how's the government funding being spent? How are they taking care of these patients? An extreme example that I'm only given to hammer home. I've never been a part of this personally, but can you imagine if, say, someone who's a CEO of a large nursing home provider, okay? We it would be unthinkable to imagine a world where his companies are receiving hundreds and hundreds and hundreds of thousands of dollars in Medicaid money, and he's using that money to buy a private island in Costa Rica. Now, that's an extreme example, but without a cost report, there's really no way for the government or the fiscal intermediary to know what is the nursing home doing with the funding that it's being given. And there are two types of cost reports that, like I said, almost all providers have to report, and they report them annually. That's a Medicare cost report, and that's a Medicaid cost report. And we're going to dive into both of them briefly. All right, guys, so let's briefly dive into the Medicare cost report. And I mean, the first question that I had that you may have is why? Why do providers submit Medicare cost reports? Because I mean, it's very very cumbersome, very time consuming. Sometimes companies have the appropriate staff to do it in house. Sometimes they have to contract with a firm that specializes in healthcare. So why submit them? Well, the answer is actually very straightforward. If you are a healthcare provider and you want to bill Medicare, you're going to have to do a Medicare cost report. It's pretty much that simple. And it does make sense, though, because if if you're receiving Medicare funding, if the federal government is giving you money to provide a service, there has to be a way, going back to the transparency and the accountability, there has to be a way to see and understand what the provider is doing with that fund. What are their costs? Where are they going? What are the cost centers? And that's pretty much it. Um, the other thing I wanted to bring up related to why do providers have to submit them is the MAC. the Medicare Administrative Contractor. Now, I only bring it up because I remember when I was running a nursing home and I got this letter and it was from a Mac. And I'm not going to lie, I thought it was like Apple. Like I had no idea what it was talking about. And it's a letter, and that letter may have information related to your Medicare payments you're about to receive, maybe Medicare payments that you've previously received and they're going to take back. It may be related to an additional documentation request, meaning your nursing home billed Medicare, and then based upon some criteria, the MAC has decided, hey, we need to take another look at that claim. Can you provide some more information, some more additional documentation before we process and pay the claim? Um, and so the MAC does a lot of processing, does a lot of audits. They actually play a very critical role in the distribution of Medicare funds to the providers. So Medicare cost report, why do providers submit them? Well, it's a very simple answer, but that is that if they want to bill Medicare, they have to do a Medicare cost report. All right, guys. So we talked about the very simple answer to why do providers submit a Medicare cost report, because they have to. What is it, right? Well, kind of like we already covered, the Medicare cost report, like the name says, it's a report that shows Medicare or the MAC all of your cost centers. You're getting this federal money. What are you doing with it, right? How much of it is going to registered nurses? How much is going to CNAs? How much is going to your dietitian? How much is going to your occupational therapist? How much is going to your owners? How much is going to your administrator? How much is going to your accountant? So, not to beat a dead horse, but it provides that transparency, okay? But there's a couple things beyond that I want to touch on related to your Medicare cost report. The Medicare cost report, just like the name implies, is only related to Medicare. So it doesn't necessarily tell you how much you're going to get paid. It tells you how much did you get paid. Okay, so it looks at prior year, and the Medicare cost report you will put on, which is a very interesting. Let's just talk about this for a minute. It's a very American government style thing to do, right? Like, think of our personal taxes. The IRS is very much aware of how much money we as individuals are making. Yet, every year we have to do our own taxes and report to them how much we think we made. And then if we get it wrong, they come back and say, whoa, 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 Brody, you actually made this amount because you underreported or underpaid. Here's your penalty. Um, the Medicare cost report, there's some correlation there because clearly the Medicare, they know how much they paid us as providers, right? They clearly know. Yet every year we have to do this report and submit to them, hey, this is how much we think you paid us based upon the from Medicare, and this is how much we actually collected. This is how much was really bad debt, and it's interesting because they kind of already know that. And we had one Medicare cost report that the what we reported as bad debt did not quite match what Medicare thought was our bad debt. And it's interesting because basically we just got a letter saying that from the MAC saying that the bad debt expense that you included on your Medicare cost report for this whatever calendar year doesn't match the actual, and here's your real bad debt. So it's just interesting that we do all this work, and basically you're submitting it to the MAC, but they already know. Um, a big component of the Medicare cost report is tracking of bad debt. And let me briefly explain why. Okay. I think by now most of you are familiar with what bad debt is in the sense of healthcare. And basically, it's going to be the reimbursement that you're not going to get. Now, let me make it clear we're talking about Medicare cost reports. It's going to be the Medicare reimbursement that you know you're not going to get. So hang with me because it's a little confusing. But as with everything, we have a fee schedule, which is how we get reimbursed. Most of you are probably aware of the 80/20 in nursing homes. Now, again, like with many aspects, it's not as simple as 80/20, meaning at one time, Medicare would pay for a patient to go into a nursing home. They would pay the first 20 days in full, 100%, based upon the fee schedule. And on day 21 through day 100, they would only cover 80% of that, and the remaining 20% we would not get. Now, that's not the case anymore. It's a little more in the weeds, but again, that's outside the scope of this course. But to tie this back into the topic, when a nursing home takes on a Medicare patient, they knew at that time, they knew that for the first 20 days, they would get 100% of what they billed Medicare if they billed appropriately, right? They knew on day 21 that Medicare payment would have a copay, right? They knew that Medicare was not going to pay a portion of that reimbursement. So that is what we put on the bad debt log. What amount did we not get from Medicare that we knew we weren't going to get? You don't get to throw on a bad debt log private pay. So you don't get to take on a patient and bill them $400 a day, and then they not pay, and you try to put it on a Medicare bad debt log. It's specific to Medicare, and it really, just for purposes of this course, think of it as that 20% that the nursing home knew they weren't going to get when they took on that patient on day 21. The nursing home knew they had two options. Either that patient, maybe they have a supplemental insurance to pay the copay, maybe they pay the copay out of pocket, or maybe they put it on their bad debt log, meaning they knew they were not going to get it from Medicare. The reason why they track that, and again, kind of in the weeds, but the reason why they track that is because they want to see how much Medicare funding did you bill, and how much did you actually get? And of the portion that you did not get, how much of it will they give you in intermittent payments? And that is a very complex topic. But the purpose of that Medicare cost report is so we can track Medicare received, Medicare not received from bad debt, how much did we get through intermittent payments from Medicare based upon that bad debt, and then they want to see what did we do with it. They want all the cost centers to be listed, and they want to know how much to the penny went to registered nurses, CNAs, what have you. I really can't think of a more way of having financial accountability than cost reports, because it really is a huge document that shows everything the provider is doing with the funding that they receive from that payer type like Medicare. And specific to Medicare, we have these cost centers. So the cost center may have come up in your other courses, but the cost center is the same concept from a hospital to a home health to a hospice to a nursing home. Cost centers are basically the cost categories. Like nursing is a cost center. It's a little different on the Medicaid side, but we'll discuss that. The biggest aspect of that Medicare cost report is benchmarking, analysis, and compliance. And let me give you an example, okay? Medicare operates retrospectively, meaning we provide services, then we bill to get paid, right? So Medicare is putting a lot of faith that providers will bill appropriately. And if they don't bill appropriately, they will succumb to some heavy penalties, and you could lose your ability to bill Medicare. So when the MAC comes in and does an audit, if you don't pass, you could lose your ability to bill Medicare in the future. And they're looking at the data from our billing, right? Like when you take on a Medicare patient, what is the average length of stay for your Medicare patients? Why would they want to know that? Well, in a very simple term, if you have nursing home A and its average Medicare length of stay is 60 days, which is astronomical, but then you have another nursing home in the same market, their average length of stay is only 20. The MAC is going to be like, why on earth would that nursing home keep their patients on average and bill us for 60 days when that nursing home is only doing 20, right? It's similar for not just the length, but also the cost. What's the average spend per stay, right? And that is a significant indication to how that provider is billing Medicare. Same concept if you have two nursing homes and one's is on per patient they see, the average stay they're billing 10,000 and one is billing 30,000. You're going to have the MAC is going to wonder why is that one nursing home who's billing on average 30,000 per stay, is that appropriate? Are they doing that much more services, or are they billing fraudulently? Are they billing for things they're not really doing? Are they double billing? Things like that. So the Medicare cost report is a huge, huge document, but in essence, it does a couple things. And I don't know if you'll get exposed to Medicare cost report, but at least if you do, you have some baseline to go off of. So now let's dive into the Medicaid cost report. All right, guys. So with Medicaid cost reports, there's some similarities to the Medicare cost report, but there are some differences too. And let's go over some of those. So similar to the Medicare cost report, basically, if you are a SNF provider and you want to bill Medicaid, you're going to have to do the Medicaid cost report annually. Also, similar to the Medicare cost report, some companies will do the Medicaid cost reports in house. Some will contract out to a firm that specializes in the healthcare industry. Different from the Medicare cost report is we don't actually submit Medicaid cost reports to a MAC. We submit it to a fiscal intermediary. And there are uh, some differences, but essentially it's semantics. It's your The fiscal intermediary is a private company, usually a large accounting firm that contracts with the state to oversee the distribution of Medicaid payments. And then, just like with the MAC, they're going to oversee the processing and the audits of the Medicaid providers to make sure that they are billing Medicaid appropriately. Um, it, some of the key difference would be though with Medicare, because you have this fee schedule. There's a very real possibility, whether intentionally or accidentally, the nursing home is going to be billing Medicare inappropriately or the wrong amount, or maybe they're billing the right amount, but they don't have all of their T's crossed and I's dotted to justify that amount. And that's where the MAC steps in and does their audits. With Medicaid, because you will get the same amount for every single Medicaid patient, it's a little bit different because the fiscal intermediary will be doing audits to make sure that you're doing the cost report, your Medicaid cost report, appropriately, because that's what's going to build your Medicaid rate. And we'll get into that in more detail in a moment. But I wanted to give a couple real world examples of the Medicaid cost report. So I actually, excuse me, I'm aware of a nursing home that, believe it or not, did not do their Medicaid cost reports. And it was a single person, single facility operation. One guy owned it, and it was one nursing home. Okay, and I don't know the details. I just know that he did not do the cost reports. He did not have a contracted service do them. They just weren't submitted, and they weren't submitted for years. Okay, so basically, you can still bill Medicaid, but without that cost report, you're not going to get you're not going to get a lot of reimbursement. Basically, Medicaid will pay you a default rate, which would be essentially the lowest in the state. And it's kind of astonishing to think that they were able to operate as long as they did. But yeah, so if you don't do the Medicaid cost report, you don't do it, you don't submit it, and it's not accurate. There is a world where you can still get paid by Medicaid, but you're going to get way less than your expenses, way less. Um, so you just really have to do them and do them right. Another example of doing them incorrectly, sometimes a company will they do them in house, they do them wrong, and then when the fiscal intermediary comes in, they're going to identify these basically these errors within your cost report related to how you're allocating your expense, and you're going to get penalized quite heavily. And I have a couple examples of that on the next slide. Okay, so I think the best way to explain what I previously said about the provider who didn't do their Medicaid cost reports and they got basically the lowest rate in the state, or the provider who did the cost report wrong, and when they were audited by the fiscal intermediary, they had significant takebacks and penalties. I think the best way to explain that is let's dive in further into what is the Medicaid cost report. So, similar to the Medicare cost report, the Medicaid cost report is how we get transparency, how we get accountability in in the Medicaid funding. How is the nursing home taking in this Medicaid funding, and how are they using it to take care of their patients? Now, on the Medicare cost report, they're called cost centers. Okay. Well, on the Medicaid cost report, they're actually components, and it's actually pretty simple. It varies a little bit by state, but for the most part, you have these components that make up your Medicaid cost report, and all the expenses within that nursing home, every expense you have, from paying the administrator to paying the CNAs to buying gloves to buying food, pharmacy, everything has an appropriate allocation on the Medicaid cost report. I want you to think of these components of the Medicaid cost report as buckets, okay? And you have a couple buckets on that cost report. You have a direct care bucket, you have an indirect care bucket, administrative bucket, capital, ancillary therapy. Those are your expense buckets that make up, that categorize that Medicaid cost report. And a very basic example, direct care bucket, that's going to be your RNs, your LPNs, your CNAs, your your expenses that are associated with direct care, nursing supplies, things that directly impact the hands-on care. Okay, so as you probably guessed, indirect care would be those things that they definitely impact care, but not directly in a way that an RN would. Okay, that would be like your raw food, your cooks, your housekeepers, your things that are very very important to the operations of your nursing home, but they're not considered direct care; they're indirect care. Okay, now I think it may be important to note, like, not everything is that white and black. Example that I'm familiar with is a client had an LPN, and her title was sales. Okay, that was her title. But what she did was she would go to the hospital or the home health or the hospice or wherever the referral source was. She would assess that patient. She would do a lot of intake. She would get on the EHR system. Um, she would get as much information as she could on that patient to see if the nursing home could meet that patient's needs. She'd go back to the SNF and communicate it to the IDT team, and they would go from there. Is that direct care or is that indirect care? Because you can make an argument either way. She's going and assessing this patient, but it's not in your nursing home. It's really not even your patient, it's a potential patient. But then if you admit the patient, does it then count as direct hands on care? That's where the fiscal intermediary comes in. and there's hundreds of pages on guidance to cost reports. But that's where when I said if you don't do the cost report um, correctly, and then when the fiscal intermediary comes in and does an audit, you may fully believe that something should be in direct care, and there may have been an update to the regulation, or maybe you were just wrong, and they say no, that goes into indirect care. Why does it matter? Well, because these buckets are not all the same size. Each bucket impacts what you get paid in the future from Medicaid. Okay? In essence, that's the purpose of these Medicaid cost reports. You want to you want to be able to take into consideration, and you want to be able to take credit for all of the expenses that you have to take care of these patients, right? And each bucket impacts, I shouldn't say each bucket, but the buckets don't impact your rate all the same. As you can imagine, the biggest bucket, or the component that impacts your rate the most, is direct care. And that makes sense, right? If you've got two nursing homes that are identical, but one has a lot more resources going to their nursing staff, meaning their direct care bucket is more full, they should receive more funding from Medicaid, right? That makes sense intuitively. As a state, as a taxpayer, and my tax dollars going to help fund Medicaid, I would rather my money go to a nursing home who is putting a bigger portion of what they receive from Medicaid into nursing, excuse me, than one who isn't, right? So, in the same way that direct care has a greater impact on your reimbursement than indirect care, as you can imagine, indirect care has a greater impact on reimbursement than the administrative component. And why is that? Well, intuitively, the administrative component is your administrator, your business office, your coder, your biller, front office staff. It's people who have basically no interaction with those patients, or very, very little. So that bucket is smaller than indirect care, and the indirect care bucket is smaller than direct care. Okay, and the buckets affect your rate differently, and it changes, it updates. The capital component at one time had an impact. Currently, it's kind of a moot point because everyone receives about the same for admin or capital. But not to get in the weeds of it, but the cost report, the Medicaid cost report, think of it as buckets. And these buckets are expense categories provided to us by the fiscal intermediary. And whatever we have on our general ledger, whether it says registered nurse wages, whether it says director of nursing services, whatever it is, there's a correlation to the appropriate cost report bucket. In that example, direct care. So, in essence, it does make sense that facilities who have more resources going to direct care should receive more funding, because you'd argue that they are doing better with the Medicaid funding, because more of that funding is going to hands-on care and not owners' pockets. Another thing that's very similar to the Medicare cost report is the benchmarking, even more so for Medicaid, because two nursing homes can be in the same town, they probably don't have the same rate based upon their cost report and some other components like CMI and things like that, but they probably don't have the same rate. Well, the benchmarking within the Medicaid cost report can allow the fiscal intermediary to compare, okay, well, this nursing home is spending this much on nursing, this nursing home is spending this much on nursing, but this nursing home has much higher acuity, meaning patients who take more resources than this nursing home. And a fiscal intermediary looks at all of that and then determines how much should that nursing home get paid per patient per day from Medicaid. All right, guys, let's briefly talk about your assignments for this module. As always, you have a voice thread, your thoughts of the week. Then you have a very short relatively speaking, a short reading assignment on the rise of nursing home cost. The purpose of that reading assignment is just to further reiterate the importance of budget planning. And the truth is, when you whether you're with a company now or you are in the future, every company has their own flavor for the budget, how they implement the budget, and whether or not you're going to be involved in the budget. But I think it's important to take away from this just the various components of the budget, but then the importance of it and how it does impact or it can impact your actual quality of care and your outcomes. And then your last assignment is you're going to take a modified, redacted Indiana Medicaid cost report. And similar to your other assignments, you're going to dissect it. I've got some questions that's going to require you to dive into that cost report, to navigate through that cost report. And I want you, it's not really a hard assignment because you're just fill in the blanks for all the answers are on that cost report. But the goal of the assignment is to get you familiar with that cost report, show you that it's a real thing that you may work with at some point in your career. It does really impact how much you get paid by Medicaid, and also to give you some, so you can conceptualize, like when someone says, "Oh, cost reports," you can actually picture it. You can see, what section has the demographic information, what section has the information about the number of beds, things like that. What schedule shows the expenses? So I think it's a really good assignment. It's something that I wish I had when I was getting my master's degree, and it's a real cost report from the state of Indiana. So, as always, if you have any questions, don't hesitate to contact me. All right, guys, that's Module 7, Budgets and Cost Reports. It's both pretty heavy topics, a lot of information. Um, but I think that just a basic foundation of what makes up a budget, why do we have a budget, why is a budget important? Same thing with the cost report and how ultimately they can impact your operations and your quality of care outcomes. So, as always, if you have any questions at all, just don't hesitate to contact me. All right, future healthcare leaders, that is all for this module. Please comment below. Let me know what your thoughts are. Let me know if there's a topic that maybe we need to cover that I can add to our coursework. Also, let me know if there's something that you think is maybe off base and we need to change up. Until next time, I'm Brody 09s.